This was a fairly crazy week for Tesla, beginning with a poll last weekend where Elon Musk queried his Twitter audience to make a decision whether or not to sell 10% of his Tesla shares, and actually purposely trying to pay as much tax as he can. It's estimated through filings from Tesla that Elon sold about 1/3 of his 10% so far, which caused the stock to tank about $200 per share after a massive run-up in the past month. Of course, investors are also exacerbating the move by fleeing Tesla shares as they wait for the smoke to clear. It's important to realize that as an individual, Elon Musk is not someone who is living beyond his means or draining resources from the planet such that he needs to be taxed to make up for it. If anything, it's quite the opposite, where he is advancing many different types of technologies and shifting the world to sustainable forms of energy and trying to expand the reach of humans. Actually, he's proven that he's orders of magnitude better at allocating resources efficiently in order to boost productivity, improve quality of life, and actually create wealth for thousands upon thousands of people. He's grown Tesla into a massive company on paper, but we can see that as he sells just a small percentage of his stocks, the price of Tesla stock comes down rather quickly, and so his real net worth is not in cash, but in shares that are valued based on the price of the last trade that went through. If someone pays $1,500 for a single share of Tesla, suddenly Tesla is valued close to $1.5 trillion, but the movement of the share price doesn't really cause anything material to change besides numbers in a database. And so while he is a perfect target for the mantra of taxing billionaires and the wealthy, any taxes he pays isn't going directly to individuals anyways. After all said and done, if Elon Musk pays an astounding one-time payment of $12 billion in taxes, something that isn't really that repeatable without taking away all of his money, based on the US government's $2.8 trillion deficit in fiscal year 2021, Elon's massive tax payment will help fund the government's spending for a little less than 2 days. And so taxing the rich sounds great, but it doesn't actually solve any of the symptoms, not to mention root issues. This also reminds me of a story of the sparrows in China, where in 1958, Mao believed that the sparrows were pests because they were eating too much grain, and so he decreed that the sparrows should be killed. Within 1 year, China quickly realized that the sparrows were not only eating the grain, but also other pests and bugs, including locusts. Killing the sparrows ended up causing massive insect infestations and actually ended up leading to famine and to war. Many wealthy people actually helped to employ many other people and even to advance technology that's unreachable for many. For example, rich people were the only ones able to afford the original Tesla Roadster, but that gave way to the Model S and X and now the Models 3 and Y, which continue to bring new tech to more and more people and allowing a company like Tesla to invest in future exciting products. Tesla alone has about 100,000 employees who have high-paying jobs and all pay taxes. And so Elon Musk is already contributing back to the economy, to the environment, and to individuals who own Tesla stock, and surprisingly many other areas that help support Tesla's operations, such as buying from suppliers, helping commercial customers save money over the long term with new, more efficient products, building new factories that can jumpstart economies, and hiring service providers that help to support all of these functions. I think this is something to keep in mind, as taxing the wealthy is a distraction from the country's core issues, which I think should focus on teaching people how to fish rather than handing them the fish, as the latter option doesn't last for very long. That said, all of this talk about Elon Musk's stock sales is also a distraction from some very positive news for Tesla's medium and long-term prospects. The stock sale is a one-time event and has no effect on the actual company of Tesla. This week, we learned that Pepsi appears to be on track to receive some Tesla semi-trucks this year. Tesla has been pushing back release dates for its new products given battery, chips, and supply chain constraints. And so for Pepsi to receive semis what's now earlier than expected will get the ball rolling for real customer testing and validation. Volume production may still take at least a year, but it may mean that Tesla is also on track with the ramp-up of their 4680 battery cells something that I think will be transformational for the company and will help Tesla unleash the products on its roadmap. Elon Musk has said not to read too much into this, as they are still chip-constrained short-term and battery-constrained long-term. But I don't think that Tesla would begin delivering trucks if they didn't have at least a positive outlook for 2022 with regards to solving chip constraints and ramping up 4680 production. The Semi is a battery-hungry vehicle, but will help customers reduce shipping and supply chain costs over the long term, something that's plaguing the entire world right now and driving up prices of virtually every good that needs to be moved from one location to the other. The Tesla Semi will also bring forth Megachargers, which I think will be an exciting innovation with how Tesla is able to rapidly charge up a potential megawatt-hour battery in a reasonable amount of time. Speaking of charging, Tesla recently announced that it will be opening up its Supercharger stations to other non-Tesla vehicles as well. They're currently running a test pilot in Norway to learn more about this business. Non-Tesla owners will be paying more than Tesla owners and will also be able to subscribe to the service, creating stickier customers. I've already highlighted many of the benefits in my Supercharger video, including the free advertising that Tesla will get, as competing brand owners will have to use the Tesla app at the Tesla charging station and interact with Tesla owners. I also think that opening up the Superchargers will put a lot of pressure on competing charging stations. Take Volkswagen's Electrify America stations, which they were very lucky to invest in as a result of their punishment for the Dieselgate scandal. However, if Tesla's charging stations are more abundant and convenient, even VW's ID3 or ID4 owners will use Tesla's charging stations. And so why would Volkswagen continue expanding their network if fewer people are using it? This actually diverts the resources to the better service and will allow Tesla to expand even faster, as they'll need to, in order to service more customers, which in turn will have a flywheel effect as their network continues to improve much faster than competitor networks, and thus drawing in even more non-Tesla users onto Tesla's ecosystem. And by the way, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data going back 10 years, and it's all freely available. This week, Tesla also got officially approved as a certified energy provider in Texas. They already are energy providers in South Australia and have a virtual power plant in California. I think this initiative is the beginning of their continued expansion as they bring battery hardware, solar panels, and software to the table. I also talked about why I think Tesla Energy will soon see massive growth in both solar and batteries in this video here, as Tesla is expanding their Megapack manufacturing capabilities and partnering with home builders for solar roofs. Elon Musk thinks that the energy side of the business will eventually be larger than vehicles, and so Tesla will be offering complete solutions from the grid to the homes and setting themselves up for their next phase of growth. In other news, Tesla's China factory reported 54,000 unit sales in the month of October. While the headlines were drowned out by Elon Musk's stock sales, they probably would have claimed that Tesla's sales plunged from the prior quarter of September, where Tesla sold 56,000 vehicles. The key here is that the expectations were for 40,000 cars, and so Tesla blew away the expectations, which went unnoticed as the stock market threw the baby out with the bathwater this week. Typically, the last month of the quarter is the best month for Tesla, which would be September, and it was. Sales tend to then drop off in the first month of the next quarter, which is October. However, sales were barely down, showing that Tesla's China business is extremely strong with an over 600,000 vehicle per year run rate. That alone is more than the entire company of Tesla in 2020. And so while the fire hose of noise and distractions has been extremely loud this past week, there have been many hints and outright very clear data showing the strength in Tesla's businesses. Their vehicle prices also continue to rise, with delivery dates being pushed out despite Tesla continuing to hit record levels of production, and they still can't even come close to keeping up with demand. So has Elon Musk's stock sale affected your strategy for owning Tesla stock, or perhaps allowing for an entry point that was previously unavailable? And let me know in the comments which of the recent pieces of news discussed, from the Semi, the China sales, to opening Superchargers, becoming a utility, or rising demand, will help Tesla move the next leg higher when all of the smoke clears away. Please hit the like button and subscribe. We would really appreciate that. And a huge shout out to all of our patrons that helped us support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.